Hey gang, welcome to Time in the Market, the investing channel with a long-term focus, also known as the best investing channel, recorded in my house, my wife's channel about bonds. No good, guys. No good. I won't even link it. It's that bad. Today we're talking about PSTH. The saga of PSTH continues with a bombshell letter that Billy Ackman dropped on us last night that basically said, hey, this lawsuit is meritless, but we might dissolve this thing. And maybe if the SEC approves the SPARC, you'll get that. Otherwise, who knows what'll happen. This whole thing has been a disaster from the get-go. If you bought at $29, $30, whatever, this thing went parabolic with all of the other SPACs, went up to $33. I can't believe I didn't sell there. What an idiot. And now it's basically under 20 bucks, under NAV. So people are essentially saying, I might as well put my money elsewhere because leaving it here is just a loss of time value of money. And it's kind of been the case, right? Anytime you bought this, it's basically at its lowest price. This is supposed to be a long-term hold. The way it was sold is it's a tontine structure. If you hold forever, you'll get these tontine warrants that became worthless with the other deal that are now apparently just gone altogether if this happens. So those are gone. That whole promise is gone. This thing is trading at 1982. You're better off buying now than you ever were. And all that means is this is what it looks like. Billy, what is you doing with this thing? Thank you, Jackie Chan. Thank you for your assistance with that joke, which landed super hard. 10 out of 10 joke. You guys are welcome. So basically what is going on? Well, PSTH, if you have followed the saga, is a SPAC, a lot of money. They kind of were supposed to be a regular SPAC, but they then made this deal to buy 10% of a company that was already going public. That was UMG. That ended up being nixed by the SEC. Bill Ackman went on CNBC and was like, we thought it was okay. I don't know. The SEC killed it. Go complain to the SEC. Thanks a lot, guy. Then he went to his own fund and said, we're just going to do the deal with my own money. And now he's raising $1 billion to buy the rest of the UMG shares that were going to be bought by PSTH that was going to be structured in this needlessly complicated deal that I made a video about before. I liked that deal. It was certainly a lot better than this. I would have loved to own UMG shares. I was bummed that the SEC killed it. But at the end of the day, this is a billion-dollar hedge fund. Hire some lawyers that don't suck, guy. Figure this out, because this letter now is more of that, really. It's like, hey, so we're getting sued by these two professors that are saying a variety of things about how the SPAC is actually an investment company and shouldn't exist, and PSTH is the biggest example of that. This lawsuit is meritless, this letter says, but maybe we'll dissolve anyway. So is it meritless? Is it not? I don't know. SPACs have gotten killed in recent months. If you're still in SPACs, my apologies. I know I've made a lot of SPAC related videos in the past, but those turned out to be not so great. And I've mostly gotten out of SPACs these days. I mentioned that in the last couple of videos I made. That, again, I've always warned that SPACs are risky. There's dilution. I generally expect a SPAC, if it's kind of on the mediocre range, to maybe fall at least 15% just due to the dilution. And a lot of these have fallen a lot more. Even the good ones like MUDs, which is taking Topps public. Just yesterday, it was announced that they're losing their baseball license, which is essentially the entire company. So it's like, okay, so even the good SPACs are just turning out to be complete crap fests, which again, kind of what SPACs were in the past. There was a little bit of a rush. Luckily, some people made money. I made a pretty decent amount of money on the ridiculousness of $14 SPACs before acquisition, the ridiculousness of this being $30 before acquisition. At that point, I was like, whatever, I'll just hold it. It'll turn out to be okay. Clearly, I was wrong, because this is what we're left with. And essentially what they're saying is, hey, we only have 11 months left. This lawsuit is kind of putting a black eye on our ability to make a deal. We can surely extend it by 6 months with a vote, but who knows? Maybe people don't want to talk to us the same way they wanted to talk to us before because of the lawsuit itself. In the last deal, they kind of had this part of the deal that was called a SPARC, which is basically a warrant to buy a future deal at cash value without having to put any money down, which honestly sounds really amazing, right? It's something that works kind of like a SPAC, but instead of an opt-out structure where you have to put your money up front, and if the deal sucks, you can take it back. It's more of an opt-in structure. It basically says, I'm not putting any money up front, but once you make the deal, if I have the warrants, which are transferable, I can acquire common stock of that company once it happens. So there's no time value of money lost like there's with SPACs, and you can buy at the same price that Pershing Square funds or whoever is buying at basically $20. So even with SPACs, sometimes, not now, but sometimes it was hard to get in at net asset value at $10 before the launch. Now most SPACs are under $10 anyway, so it doesn't matter. And honestly, with the way this was handled, who knows how much value the market's going to put on a SPARC, even if it's passed. And that's the other thing. This whole thing is basically saying that, hey, here's what we want to do. We know that PSTH is in peril because of the lawsuit, because of the timing we have left, because of the other deal. Maybe we have a black mark on our record. We want to issue a SPARC instead. And if the SEC and the New York Stock Exchange approve the SPARC, we're going to put it to a vote that basically says, hey, we're going to get rid of PSTH. And we're going to return that $20 to shareholders of PSTH. And then in lieu of that, in lieu of the deal we're going to make there, we're going to give you a warrant for this SPARC in order for you to participate in the next deal we're going to make. And the benefit of that for Pershing is that they don't have a timeline for that deal. So it could happen 5 years from now, it could happen 10 years from now, and they have their own money to put into this deal, and they'll have the potential for capital from anybody who holds a SPARC warrant. So that sounds good. The good thing for investors, if that happens, is the SPARC warrant is in your ownership. You can sell it if it trades on the market for any money at all, given what's happened with PSTH, who's going to trust Billy Ackman to make a good deal in the future. And when that deal is made, you can say, I want to buy this at $20, or you can do nothing. You can just sell it to somebody else if the deal sucks. But if the deal sucks and you sell it to somebody else, the value of that SPARC will probably be close to zero. So, and then if you have distributable warrants, which is essentially PSTHW that trades on the market right now, we'll replace those with additional SPARC warrants for you. So it preserves the value of those distributable warrants. What it doesn't do is it basically means those tontine warrants, the basis that a lot of people like this for, are gone. They're gone. They're just gone. They're never going to exist if this happens. Now, this sounds okay-ish. It's better than nothing, but it still blows because, one, people were still in this because they were expecting PSTH to make a deal within the next 15 to 16 months, 17 months tops, right? Or at least within the next 11 months. And they trusted Bill Ackman to make that happen. And then now it sounds like they're kind of stopping pursuing that. It does say that, hey, if PSTH hasn't made a deal and this is approved, we'll do this. So it's possible that PSTH still has a deal out there and they still make a deal and this is all moot. But it's possible that they're just kind of saying, this is what we're going with, and we're not really going to look forward to more PSTH stuff. And that's why the stock is down a little bit, because people are like, now, well, what does this mean? If the SPARC doesn't get approved, you're basically waiting for a deal to happen and or getting $20 back. And the likelihood of getting $20 back is looking higher and higher by the second. Now, if you look at the warrants, because this introduces uncertainty, pre-market, they're down 50%. And why is that? Well, because these warrants are going to be transferred to SPARC warrants. But if SPARC doesn't get approved and they don't make a deal, which is looking more and more likely, these warrants are worth zero, right? So they were $3 yesterday. They're $1.40 now. I don't know what they're going to open in pre-market, but it's possible that they're essentially worth zero if the SPARC doesn't get approved and no deal is made. And that's kind of what it's looking like to me. Here's the thing with deals like this and investments. If you're burned once, you kind of stop trusting this person that burned you. And certainly Bill Ackman has burned investors in the past, and this isn't potentially the first time. There's Valiant, there was Herbalife, there was a bunch of crusades there he really gets into. And he's a great investor long term, but there's a couple of things that he has misses on. And this is starting to look more and more like that. This whole thing, just like the UMG complicated deal, shouldn't have been released until that was all signed off by the SEC. So now they're releasing this statement that basically tells people who were either going to invest in it or maybe companies that they were going to work with that, hey, we're kind of not all that thrilled about how PSTH is looking, and we want to dissolve it. But as a carrot, we'll give you the SPARC thing if the SEC approves it. But my thought process is when the SEC didn't approve your other thing, we don't really know why that was. Maybe they didn't like the SPARC over there, or maybe they didn't like the way it was structured, or maybe it was the fact that 80% of the money wasn't being spent on a SPAC as it should have been, as they should have known that, which is like, why are you releasing this? I'm sorry I closed my Jackie Chan meme, but it applies again. It's like, geez, man, who is you working with, buddy? Who are you hiring to make these decisions for you? And this kind of smells of the same thing, where it's like, we're giving you these SPARC warrants if the SEC approves it, if the New York Stock Exchange approves it, and then we'll return your cash. We'll give you the right to vote for that. We'll give you the opportunity to invest in the next business combination at SPARC's cash value by giving you at NAV rather, by giving you these SPARC warrants. And if you have distributable warrants, if you have the W warrants, we'll give you the SPARC warrants as well to preserve the value of that. And that'll be good. We think you'll like that because, that's better than the $20 in cash, which honestly could still happen, right? If the SEC, if the New York Stock Exchange comes back and say, no, we're not approving the SPARC thing, what's the next step, right? They still have this lawsuit looming, and they say, why would we use this meritless lawsuit as, an excuse that say that it's going to impair? Well, here's some answers to that. You can read it on your own. I'll link this in the description down below, but it's not really the point. To me, this seems like, we know that this is kind of looking crappy for us. There's this lawsuit. It's the highest profile SPAC. It's a bit different than some random lawsuit that you hear about for every SPAC, because it's not just some random company filing it. It's the former SEC commissioner or something like that, and another professor. Sure, they may be doing this just as a way to boost their credentials as professors, whatever. But maybe this impacts SPACs in general. Maybe it impacts whatever, but it might impair their ability to make a deal. The Universal Music Group deal didn't go through. Bill ended up blaming the SEC. Maybe now the SEC isn't too happy about it. They're like, screw you with this SPARC thing. It's not a legitimate form of an investment. This thing is a whole new thing that you just kind of made up. And if it doesn't get approved, then what happens next, right? Does this impair their ability to make any deal? Does this send the warrants down to zero? I sold my warrants a long time ago, so I'm out of that game. I sold it after the UMG deal. I was just kind of like, I don't want to deal with this. I'll just, deal with the shares. Then the UMG deal fell through and this continued plummeting. And now you're stuck with this next complicated thing that he's rolled out before it's even approved. And it's like, come on, man. Just, dude, it's like, get your crap together. This was supposed to be a retail-friendly SPAC, and it's anything but. In fact, it's the most complicated SPAC I've yet to see. And am I going to continue to hold at this point? I might as well. My cash basis for this is like $20.70. I might even actually buy more if it starts really falling below 20, because at the end of the day, I have a bunch of cash just sitting out there. And even if all of this falls through, I think, I'm sure I'll get my cash back. I'll get $20 back. So there is little downside to me. If I were to sell now, I'd have a 2% loss or something like that. And there's some upside in that. At the end of the day, I still think Bill Ackman is a good long-term investor. I think if this SPARC thing gets approved, then it could be better for me as an investor than if they just rush through and make a deal through PSTH, because it gives them opportunity to wait a couple of years. Maybe there's a bear market that they can get a really good deal in. Right now, buying things in this market, you're maybe buying near a top, right? You never know that as an investor, but things are expensive. It's clear with what happened to a lot of other SPACs recently that have taken companies public, and even some IPOs. Some of these valuations are not loved by the market. So maybe the next deal they would have made would have not been loved by the market. I heard some rumblings about Panera Group, and I was like, do I really want Panera Group? Really overpriced bread bowls? I don't think so. There's rumors around Stripe, never going to happen. Why would they want this mess to deal with. There's rumors around Plaid, combining Plaid with Stripe, Chick-fil-A, which probably isn't going public, Menards, which probably isn't going public. So a lot of rumors, but the cold hard truth is this is a complete disaster. At this point, it's a sunk cost for me, but I'm lucky enough that I didn't buy far above NAV. That's always my strategy with SPACs. Almost never buy above NAV unless you really, really love the deal. All of my cost bases and SPACs are 1 to 2% away from NAV, or even some below NAV at this point, just because it's like, I have some cash. I'm going to get 0% in a bank account, or I could get 1 to 2% from arbitrage in a SPAC. And that's kind of what you're seeing here now. You're down a little bit, maybe down 1%. So at the very least with Pershing Square, if you're buying today, you'll get $20 back with upside of this SPARC, with upside of maybe still a potential deal through PSTH. So again, people always say that, yeah, there's a floor with SPACs. Yes, but it also doesn't mean that PSTH can't fall lower than 1983, that it is pre-market than the 1999. Because at the end of the day, it's still cash that's locked up for an unknown period of time, right? You don't know when the SEC will or will not approve the SPARC. You don't know when this cash return will happen. You don't know when and if a deal is made. So if there's other deals in the market and somebody has $50,000 locked up in PSTH, they are willing to take a 1% cut to their $20 net asset value that they would have gotten 6 months from now or 12 months from now, because they can invest in Microsoft, they can invest in Apple, they can invest in other stuff, right? That's what sucks about PSTH. It's not only the fact that, hey, this is down, it's basically flat. Well, it's basically a zero return for over a year, and maybe a 50% drop if you bought at 30. I'm sorry if that happened, but you could have simply put your money in the S&P 500, and look at this crap. This thing went up a ton. You would have been up to 30% instead of down 20% or whatever. And that's the annoying thing, right? It's a terrible investment. It's been a terrible investment. That's all there is to say. And I'm not super happy about it. And that's saying that as somebody who bought at 2070 overall, right? Because I bought some on the way down, and I actually bought some yesterday at like 1999 or whatever it was, 1996. So the fact that this came out after that, I was kind of like, ugh, yeah, here we go again, more nonsense. But again, I feel sorry for the people that bought this much higher, and that's been the case with a lot of SPACs. Where if you were buying during that hyped up couple of months where these things were selling like hotcakes and everybody was buying the next big EV company, you really didn't do well for yourself, unfortunately, which is a shame. But that is, SPACs are always risky. You have to really know what you're doing. And you really have to know when to get out if things are starting to look bleak, because right now it's not a good time to be in SPACs, in my opinion. Not a lot of good deals happening. I haven't seen a good deal in a while, really. Anything that de-SPACs pretty much plummets to the earth. A lot of companies that announce their first earnings, the earnings are not almost always terrible. There were about 20-25% of companies that actually raised their guidance from the SPAC presentation. But companies like MUDs were one of them. And then the next day you hear that, hey, we lost our deal that probably makes up a third of our revenue or something like that. So maybe a third of our EBITDA, right? So that's a real bummer. So that's kind of where I'm at with SPACs right now. PSTH is still my biggest SPAC investment. I think at this point, this one, Genius Sports are my top two that I'm still sticking with, and I still feel comfortable holding because again, my buy-in price here was low, and I think the timing here is such that, this thing is probably going to wrap up before that 17-month period. It kind of sounds like it will. Even if this SPARC doesn't get approved, I feel like the end game here is to just return cash and say, we're going to try to kind of wash our hands of this, not make as big a deal as possible, because I don't know if this thing has any real good legs to make a great deal. You never know, right? That could be the other option. If this thing doesn't get approved, they're still going to say, hey, we're continuing forward. We're going to try to make a deal. Maybe they make a deal with Panera. Maybe they make a deal with something that's simpler than what the other thing was. and we'll see where it goes from there. The market is starting to struggle a little bit. There's some pressure on prices. If you're invested in Chinese stocks, you're not doing well. Actually, look at something like Alibaba, down 30% year to date, down a lot from their all-time highs here, close to 50% from the all-time highs. A lot of Chinese stocks are getting pummeled. There's some news out of China that growth is slowing down. Maybe there's some news outside of here that growth is slowing down. And in some ways, if you're a SPAC investor, that can be a good thing. Like if the stock market pauses, right, the cash you have starts to be worth more in relation to the company you can acquire, right? And if you think that that's going to happen, if you're seeing the market head that way, then SPACs are still a decent spot to keep your cash, and kind of just say, hey, if the deal sucks, I'm going to get my cash back. I'm going to participate in the tender offer and get the hell out of there. You just got to keep an eye on when that happens, because once these companies de-SPAC, it's been a bad deal. So PSTH, real mess. Kind of really, if you didn't dislike Bill Ackman as an investor already, I know some people kind of think ill of him. You're certainly not seeing him highly right now with how messy this has been. Again, if the third part of this story is that, hey, the SEC came back and the SPARC is gone, I will probably make another video, because I could totally see that happen. But for now, I'm just waiting it out, seeing what happens. If I get a SPARC, I don't expect it to be worth a lot, but I'll get my cash back, maybe at a slight loss. Maybe if this thing drops like $19, I'll just get my net asset value under $20 and make a profit either way. But if I do get a SPAC, I don't really expect that to be worth a lot because of this, really. The fact that will basically mean you have this call option on something that might not happen for 5 years, and also is driven by somebody who has made a mess of this deal. The market just might not view that all that properly, and the valuation might be pretty low. And if that's handled as a taxable distribution as well, that could be annoying for people who own a lot of these shares, or if you're overseas or something like that. Just a mess altogether. Just a mess. What is you doing, Bill Ackman? Get your act together. Hire better lawyers, man. Come on, man. Remember, guys, not a qualified financial advisor, just doing this for fun. Please talk to a qualified financial advisor if you're making investments in any stocks, PSTH or otherwise. I am long PSTH. I'm not long BABA, even though I mentioned it, but I am starting to look at it closely. It's getting interesting. So keep all of that in mind. Let me know what you guys think about this mess of a deal. Let me know what you guys think about SPARC. Are you keeping the shares? Are you selling? Are you just getting the hell out of Dodge? I don't blame anybody who says, man, this has been a mess. I'm out. I'm out. I think a lot of people are just going to do that and just going to say, I'm out, man. I'm out. I've wasted all of this time on this thing. And if you're keeping your money in this and you have other and better investments, maybe that's the right move, right? If you're keeping your money in this, your money could still potentially be locked up for 17 months, up to 17 months, right? And at the end of the day, you could potentially get $20 back, which is, slightly more than you'd get today if you sell it, but it's still 17 months that you could have put that money into like some high-ish interest crypto bank account or whatever it is you want to invest in that could give you some sort of guaranteed return, or you could put it into some other stocks that are more enticing or whatever. So a lot of decisions to be made here. This has been nothing but a mess, and I do not appreciate it at all. Luckily, this is a very small portion of my overall investments, as are SPACs in general. Most of my money is in index funds, S&P 500 funds, the simple, boring stuff. And that's been a winning strategy for as long as you can remember. You can't go wrong with index funds if your time horizon is 10 to 20 years. You just can't. With some of these individual stocks, you can certainly get burned in the short term. Hopefully in the long term, this thing will work out okay. But that might be a long time until that happens, especially if the SPARC is approved. You might be looking at potentially buying something for $20 3 years down the line when a deal is actually made through a SPARC. And that is a long, long time to wait if you bought this at $30 to realize any sort of return. And that sucks. So thanks for watching. Have a good rest of your day. And I will be back with more videos. I might make more videos unrelated to SPACs and stuff like that, because SPACs are kind of uninteresting right now. Just overall stock analyses videos. So hit the like button, hit the subscribe button if you want to see more of that. I'll probably do more SPAC stuff, but a bit less than usual, just because they're not an interesting area to invest in right now. But some of the de-SPAC companies that have dropped 50% might start getting interesting now as well. So maybe I'll cover some of those. So thanks for watching. Have a good rest of your day, and bye.